At the core, when we want to know what one or two things are the single most important in designing an employee loyalty and alignment program, what do we have to do to make sure it's going to be successful? It really 100% of the time comes down to communication of what the owner wants. It's hard for employees or contributors to align if they don't know. So you have to be clear on the goals, where you're going and why. And the second one is measurement, to show people how the entity, how the company is doing against those goals, and how the individual is benefiting from it, how their account is likely increasing and they're sharing in the wealth that they're creating. Those are the two most important things in creating a employee alignment and loyalty program. Some of the things that business owners talk about with me is in the past how they've implemented similar type programs that turned out to be absolute tax nightmares and regulatory messes. That can happen easily. And in fact, it's one of the challenges with stock options and everything else is following all the rules and regulations associated with them, because they're ERISA and federal labor law and state law. I mean, they're so complicated in a lot of ways. So one thing that we know for a fact, just through testing and everything else, is when you issue out of the money profits, interest, or capital interest, there's no taxable event. And shown challenged wins. So structurally, we know that this is super tax efficient for employees. When they get their capital interest paid, if there was ever an exit, it's on long-term capital gains. When they get their annual share of distributions that's in excess of the economic profit, that's a distribution. Now, it could be treated just like ordinary income, but it's just like what we get as owners. So that's the idea. Alignment, same taxation, same everything that we get. In terms of regulatory environment, everything we've designed in our program is to be regulatory simple, meaning it's not regulated. Other than we got Reg D, but when you see the subscription agreement and how we use that, it's just super crystal clear. So it's been tested and it's been looked at by a lot of lawyers, and we invite all of our clients to have their lawyers and, when necessary, their CPA look at this stuff so that all of our clients can get comfortable on the tax and regulatory efficiency of the design. The loyalty and alignment programs that Wealth Creator Coaching implements are exponentially more effective and powerful when they're coupled with really powerful KPI management reporting. What does that mean? Key performance indicators are the things that lead us, the leading indicators of where things are going to be. So like in sales, we all know when we do sales that we have to have an upper part of the funnel. We have to have a certain number of people, and we know there's going to be a certain number of those people that are going to want to have a pitch or ask more questions, and then they'll ask more questions until there's a proposal, and then they become a client. So from the first people looking on your website or filling out a form to the people that actually pay you money, there's over time a percentage that's usually pretty consistent. And then you can run campaigns to see, hey, do my unknown prospects that hit my website like red and the font Arial better than a serif font or Times Roman? So you test all these really cool things. Those are KPIs because those lead to the top line of revenues. There are KPIs, efficiency about like employee turnover. In your typical accounting report, you don't see that. You don't see how long it takes before an employee is productive. You don't see your head count. So there's lots of really important information on running your business that you would want to have. If you think about it, most people are driving their business, if they're in a car, and it's completely cracked and fogged windshield, they're looking in the rear view mirror behind them of what their gap or cash accrual, or their accrual gap or their cash-based accounting told them happened a month or 2 months ago. How is that useful? It's not. It's useful for banks and investors and the IRS. But for running your business, you need to think about the things that are going on in real time and in front of you and be able to see them. Sort of like if you're driving a car, you need the speedometer and the tachometer and how much gas you have. And running a business is actually more like flying an airplane. A lot more dials, altitude, speed, distance, all sorts of things matter. And very few people put enough time into those leading indicators, those KPI management reports, If and when our clients put really effective KPI and management reports in front of their employees and in front of themselves, our loyalty and alignment programs are way more effective, way better, because everybody can be rowing in the same direction and get corrections in real time, not a month later. I mean, literally, how good is it if you're trying to train a dog and your dog does something bad? How useful is it would be to correct and tell your dog it was bad a month after it happened? It's crazy, but that's what we do. To what degree have you used KPIs and SMART goals and really powerful management accounting reports in your company and with your key people? I'd love to know what you learned, what worked, what didn't. Please share your comments below. What have been your biggest successes and your biggest challenges in implementing employee bonus plans, incentive plans, or loyalty and alignment programs? I'd love to learn. Please share your comments below.